Welcome and thank you for joining us for today's webinar, How AP Can Support the Future of Finance Operations, brought to you by IOFM and sponsored by OpenEnvoy. We have a few housekeeping notes to go over before we get started. If you have any technical questions or issues using the WebEx platform, please use the chat box and I will respond right away. If you have any issues with audio, please click on the phone icon above the chat window to receive the teleconference info. For those that do call in, to ensure call quality, everyone's lines have been muted. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. If you continue to experience difficulty, please email webinars@iofm.com and we will respond as soon as we can. We encourage you to ask questions throughout the presentation. Please type your questions into the chat box and hit send to submit them. At the end of the presentation, we will have our presenters answer these questions. We will have 2 polling questions during the webinar. A pop-up box will appear when we run each poll. Please choose from the multiple choice answers and hit submit. We'd love to have your participation and insight. This webinar will be recorded and you will receive a thank you email with the on-demand materials within 2 business days. Our first speaker today will be Matthew Tillman, co-founder and CEO of OpenEnvoy. Matt has spent the past 2 decades applying machine learning AI to finance, advertising, and logistics industries for the world's largest brands. In addition to OpenEnvoy, he invests in early-stage companies out of his fund, TNT Ventures. We will also hear from Jess Scheer, editor at IOFM. Jess is an award-winning business reporter covering the needs of financial operations professionals for more than 2 decades. As IOFM's executive editor, Jess is responsible for continually updating the member content on iofm.com, as well as building our certification and event agendas. He is a popular speaker, hosting dozens of webinars each year and keynoting IOFM's conferences. At this time, I'd like to welcome our speakers and hand the webinar off to Matt.
Thanks so much, Jody, and thank you everyone for being here as well today. It's great to connect with Jess again. I'm looking forward to our conversation, and thank you to IOFM for hosting us. One of the things that we get asked a lot is obviously we're an early company, so maybe I'll just give you a quick background of the company for everybody, and then Jess and I can get into conversation a little bit about how AP is changing the financial operations landscape. So the company itself was founded last year, kind of in the middle of the pandemic, but I've been for close to 2 decades now writing matching software in various shapes and forms for some of the world's largest brands. And one of the challenges that I had personally in the past was specifically matching invoices to purchase orders and bills of goods received, et cetera, in a variety of different industries. And so one of the things that you find is that in order to find all of the hidden gems in your invoices, it takes a lot of time and a lot of human capital. And so we wanted to build a company from scratch that was focused on nothing but automating the process from start to finish when it comes to AP. And that obviously is a well-worn path. There's a lot of companies in the space, and I'm going to talk to Jess a little bit today about how that works. And so, Jess, with your background, obviously you've spent a lot of time in this space, a lot of time with different companies in this space. Your background, what are kind of the key issues that companies have, and what prevents them from really diving in and automating their AP environment?
I think there's 2 or 3 issues. I mean, one has to do with the fact that automation is a once in a career kind of investment, or at least it should be. And so there's no institutional knowledge of having done it before. So there's analysis paralysis when it comes to how do we automate, where do I get started, what should I be looking at, what are the key considerations. So there's that factor. I think the other thing that slows folks down is lack of respect for what AP does. It's not necessarily top of mind for the IT department's agenda in terms of things that need to be automated, right? we know, Chris and I know, that you are tax experts, regulatory experts, the last line of defense for fraud and abuse. You manage the cash for the organization. Oh, and in your spare time, you pay bills, right? There's a lot of things going on inside of the AP world. But convincing folks outside of AP of everything that you do is sometimes a challenge.
Yeah, that's one thing.
And I think, oh, go ahead.
I was just going to say that's one thing that we found with a couple of our customers was that there's so many other things that they actually hired their AP team to do, and then their AP team ends up really just servicing either the automation that they've purchased, which is something I think you're going to get to, but also just functions that they weren't supposed to be spending their time on, a lot of repetitive manual tasks.
And removing the non-value added work frees up time to tackle the more value-added work that we're gonna get into. And I think one of the biggest opportunities that we're seeing is, in one of the most exciting changes we're seeing in the marketplace, is AP really leading that. With the exception of payroll, every dollar a company spends flows through AP. You guys know exactly what's being spent, by whom, for what, when, and how. And there's an incredible opportunity to do some deep dives into that data, to work out cash forecasting, cash management, to mitigate risks across the organization, and to really drive value for the finance team. And so just as finance is becoming more strategic and demanding a more strategic role inside of an organization, so too is AP in driving that.
Yeah, it's funny. You mentioned that one of the things that surprised us when we started the company, and certainly we made the company to scale, however, in such a short period of time, some of the world's largest brands have been coming to us, asking us for help, and they've already spent many millions of dollars over many years automating various portions of AP with very large enterprise software packages. Do you have some data on how many of these companies are looking for new solutions, even though they've already purchased these solutions in the past?
Absolutely, and this number hurts my heart. But the number is 52%. 52% of organizations that have bought AP automation in just the last 3 years are already planning on replacing what they bought. And it's not because what they bought wasn't any good, and it's not because their needs have changed so radically, or the technology is growing at such a rapid clip that what they bought they've outgrown. It's that their processes weren't ready, and the process changes that were necessary in order to get the most out of whatever technology they bought has led them to this position where they're looking to throw good money after bad, right? Where they're in a situation where they're looking in what should be a once in a career kind of investment. They're looking to make it again after 36 months. And that hurts my heart for a number of reasons. It's not only incredible waste of resources and political capital, right? For all the reasons we've talked about, you've got to convince your boss, and you only get sort of one bite at the apple in terms of getting them to make those changes often. But the other part is the change management inside the organization, right? I know firsthand how challenging it can be to get folks to change how they do what they do. And you've convinced them, and you've got new technology in front of them, and now they're in a situation where they've got to learn something else because you weren't ready. And I think one of the things that excites me about this conversation that Chris and I have talked about often is the open nature of what his system delivers really helps prepare folks for that integration day, that go live day.
Yeah, that's right. I mean, one of the things that we found, and that I found personally when I was trying to find solutions like this, invest in solutions like this, buy solutions like this, is that there's a lot of manual labor required to automate AP, which is sort of the irony of it, right? So in order to get information into the system, it's not automated at all. And then, every company that we've spoken with has not only an AP, a procure to pay solution kind of in place that they've purchased many years ago, but they have all these sorts of shoestring and bubblegum patchwork systems around that in order to achieve kind of what they were doing manually in the past. And while it may lead to a slight gain in efficiency, the expectation even from those departments isn't 100% gain in efficiency. It's just incremental gains because they've been conditioned that you have to go out and purchase an OCR tool. You have to spend your time training the OCR tool. You have to spend your time QAing the data from the OCR tool. That's become like the classic expectation in this industry. And I'm from other industries where we use artificial intelligence, in very practical applications in the payment workflow. I mean, certainly in the trading industry, algo trading is artificial intelligence for trade execution for hundreds of billions of dollars in capital per day. So this is not an area where you can afford to rely on thresholds and tolerances. You have to get it right. And so one of the big things that we started out with was just ensuring and being able to SLA with our customers 100% accurate data into the system in the first place from all their various sources, such as documentation, back office systems, et cetera. And it's a total differentiator in the space because of how we've approached it. So that was like thing number one. The thing number two was, to your point, if you've spent all this money on an AP solution, you better get your process right because it's just going to replicate what your process was. And so I think, our attitude and our philosophy has been adapt to the customer's process and then be able to very quickly adapt as they improve their process internally instead of sort of this dictatorial imposition of process onto a company that's, one of our customers has been around for 130 years, right? 135 years. And
Right.
So, for me to show up, founded in 2020, to show up and say you should change your entire AP process is maybe more than hubris, right? And so being able to adapt to that quickly in real time is what we've focused on.
Absolutely. In a prior life, I was a consultant, and in that role, this was predating my time here at IOFM, but in that role, folks at the organization I was consulting to didn't tell you how long they've been at that organization. They said how many generations their family has worked for that organization, right? And so to change a process meant I was telling you that the way your grandfather used to do it was wrong. And I'm not insulting your grandfather, right? I'm sure he did a fine job with the tools available, but the tools have improved. And just like you wouldn't expect the shop floor to be as manual as it may have been 100 years ago, the finance department has all kinds of tools at their disposal that allows some of the basic non-value added work to occur, and I think to occur more quickly to free up time for the value added tasks. One other thing I wanted to add in terms of what's delayed people's desire to automate is, and I think it dovetails in what you were just saying, Matt, and that is that we're in a situation where people fear that they're going to be automated out of a job. And I want to share a story because I think the opposite is true, that what actually happens is you end up being in a situation where you need your people just to do different tasks, and it may end up resulting in adding FTEs. So University of Maryland Medical Center, great example. A couple years after they integrated, I asked the director there how things were going, and they said, we're about 50% bigger in terms of staff. And I said, oh no, does that mean that you didn't get the efficiencies out of the automation effort that you had been planning? She said, no, the opposite is true. What used to take us all day, we're now done long before lunch in terms of just processing invoices and paying those bills. But what's happened is others inside the organization have seen the value we can drive, whether it's cash management, cash forecasting, risk mitigation, compliance checks, et cetera. And each time they've added another half FTE here, another full FTE there. And we've ended up larger now as a team than we were before. And I think that's important to your point. It's not a matter of worrying about, is this going to change my processes? Am I changing how I'm doing what I'm doing to the extent that I won't be needed anymore? But I think instead it's the things that you don't like about your job, the grunt work, let's be honest, is stuff that can be done in a fraction of the time, and it frees you up to do all kinds of things that you only dream of doing now because you don't have the time. 3 weeks ago, I was having a conversation with someone who said that because of the increase in invoice demand, and we've seen the sheer number of invoices and the sheer size of invoices increase each of the last 3 quarters, which is a great sign for the economy. But what it also means is that folks are having to work longer hours just to do that basic work. And I think, there are ways, and you represent a really interesting option for folks that want to get that basic work done faster to free up time to take on more value-added tasks, things that, quite frankly, the finance department is requiring going forward.
That's a great segue into how companies measure AP automation, because usually they took a look at their department, they took a look at the hours, they take a look at the inaccuracies, the mistakes, the overpayments, wasted spend, etc. And then you start to see that as you change your expectations in terms of what you were doing manually to an automated process, you start to realize how much more bandwidth you have to affect treasury in a positive way, which generates cash flow. And the thing that I find really fascinating about our customers is that their expectations on software were decades old. One of our customers uses a mainframe to issue payments, to cut checks, and it's something we had to integrate with a mainframe, with what I call a mainframe on this call, but for the technical people on the call, it's OS 390 or IAS. But the thing that's really fascinating about that to me is that you can, with technology, where technology has come in the past decade or 2 decades, is pretty measurable in terms of the impact that it can have on your business. And so our customers were somewhat shocked when we started to say, no, we can have an ROI. You can pay for this platform within 90 days, like many 10x over within 90 days. And that's a bit shocking because historically it's 18-month repayment window, it's 2 to 4 months to go live, et cetera, et cetera. That's number one. Number two is, you mentioned earlier that people are scared of really betting their political capital on making a call with a company with an AP automation tool, because they know there's so much vendor lock-in. The way these systems are built is there's so much integration work, or there's so much change management that it actually goes in the software providers, in the vendor's favor, because there is so much change management. And so actually the reason that we named the company Open was OpenEnvoy, meaning open invoice. And specifically, we call it Open because Parker and I had been through the evaluation process on, Parker, my co-founder, and I have been through the evaluation process on these tools in the marketplace and invoice auditing solutions, et cetera. And it felt like all these companies were just trying to trap us. And so the ability to, as companies upgrade ERP instances and things like that, the ability to have self-serve upgrading and to have real-time upgrading was a really big deal. And to be able to just click anywhere in the system, download every single document, so long as you're an admin, obviously, every single document, every single piece of data that you've sent into the system, and giving you control over your data, we thought should just be an expectation. But if you talk to 9 out of 10 companies we talked to did not have that expectation. They just assume that there's a good deal of lock-in once they participate. And then finally, integrations. I mean, half of the AP automation tools that I looked at and I evaluated really caused me a problem as a customer, because they felt very much like professional service organizations masquerading as technology companies versus the other way around. And I think that it scares you a little bit, right? Because you know that you're just going to be on the line for many, many hundreds of hours of professional services work. And that is a variable cost, which obviously accounting and finance departments very much do not like variable costs. And so for us, the big thing was really around real-time integrations, building APIs to help connect our customers so that they can, opt in and opt out to new functionality as it comes online. And so have you seen, I guess the big question here for you is, have you started to see expectations change over the past, let's say, decade, in terms of what AP automation can do in terms of taking actions on its own and not just relying on the actions and the input of of its customers.
Absolutely, but I would say the window is really the last 18 to 24 months. We were seeing just before COVID a tipping point where the majority of organizations, 51, 52% of organizations, had some form of automation in place. That number is now 77%. And so I think we've seen a trend that had been inching forward over the last couple of years pre-COVID to now being table stakes. It is unrealistic to ask an organization that can operate every other function remotely, but AP has to be done in the office. With a couple exceptions, right? There's one organization, again, this is one of these, it breaks my heart to even think about, but they actually brought a check printing machine home, which just raises all kinds of risks in my mind. I'm sure everything was above board, but there are some times where it's good to have a fail-safe in the office. It'd be better just to go away from checks altogether, but I think we're seeing a number of expectations that are changing. So I think one is there's an expectation of folks being able to do their work from wherever. Certainly over the last 18 months in this COVID world, that's meant working from home. I think just because of the pandemic, I think one of the things that we're seeing though is a transition toward younger generations in the workplace. They're bringing with them the expectation that of course I can work from home or work remotely, work from Starbucks. What's the big deal? And that 3 years ago, that was a big deal. 3 years ago at one of our conferences, we had an entire hour devoted to, can you really trust your employees to work from home? How would you manage, how could you possibly manage such a scenario? Now it feels laughable. And again, we're talking about 24 to 36 months ago, right? So expectations change rapidly. I'll tell you another scenario that's happening now that would not have been possible. Delta Dental, the big dental chain, their AP department is based in Syracuse, New York. The head of their AP department is based in Chicago, and at this point only visits the office once a week. Forget working from home and how much that's changed, but we're now in a situation where it doesn't even matter where the AP directors are, right? Your staff can be wherever they need to be, your leadership can be wherever they need to be, and you can make incredible progress as a result of automation.
We're going to talk about that too now. We're going to talk a little bit about, and I think we've got a poll to go along with this. It's probably a good time to do that. But when we talk about what do AP departments care about, you know, when we go into our customers, it kind of breaks down into three key areas. It's usually they want to know where they're spending money and where they're wasting money, number one.
Right.
They want to know where, and not in any sort of order because it's different for each company, right? Some have really advanced reporting tools, others have really inefficient processes. They want to speed up their turnaround times so that they at least can determine when they want to pay their vendors, right? Instead of being on the back foot and being forced to pay their vendors, or worse yet, hitting credit checks. And then they want to generate cash flows. They want to find new areas for cash flow. And I think we're going to launch a poll right here for our panelists, and really try to understand, kind of for the people on the phone, what makes most sense for them. So Joni, if you'd pull that up, that'd be great. But while we're doing that, while we're pulling that panel up, the thing that's really fascinating for me is, you know, you mentioned check cutting services.
Right.
I love that because for our largest enterprise customer, and everybody will see a poll over here on the right-hand side of your screen. And so I'd love to understand for each of you, which is most important to your organization? Is it increasing cash flow, end-to-end spend visibility? So really finding out, you know, what that sales team is really spending money on is a classic example, and doing that by GL code, improving operational efficiencies, so just reducing costs associated with manual repetitive tasks that you shouldn't be doing with a team in reality. But one of my favorite things is our largest enterprise customer sent me a check because we're a fully remote company. So they sent it to our little office that we have here in Nevada. And I picked it up and I took the check and I took a photo with my phone and I deposited it with my phone. And it's a pretty sizable ACV, you know, one of these six-figure deals. And to think that so much work before they started working with us went into processing a payment to a vendor within a reasonable period of time for me to just take a photo of it, sign it on the back, take a photo with my phone and deposit it into the company's bank account. And that's what's pulling the market, I believe.
I think that's one of the gross inefficiencies. A check costs anywhere from $20 to $40 to process, right? As opposed to an ACH or electronic payment that might cost pennies. Because the labor involved, and especially during the pandemic. I mean, let's just break down the process. You've got to send someone into the office. You've got to run the check machine. You've got to then find who has signature authority, perhaps travel to their house because they're not likely in the office. Get them to sign the check. Then, and this sounds so archaic, you have to put it in an envelope, put a stamp on it, or get postage.
Yeah.
You probably don't have a mailroom operating at peak efficiency, so you're probably standing in line at a post office.
That's right.
And then the post office needs 3 to 5 business days to get it across the country from wherever the company was to Nevada, for you then to snap a picture in 5 seconds. It does not take an IT expert to say a lot of those early steps could have been wiped out considerably just using electronic payments. And it would have saved you the step of having to snap the picture. Not that that was a big time-consuming step, but I would tell you that a lot of the vendors that still require paper checks are not comfortable with snapping pictures. They're then wasting time going to a bank, doing bank runs, right?
That's right.
But it's one of those things that I think, you know, we've seen a drastic drop in during the downturn because of just the physical safety issues of someone going into an office and mailing it, and then the vendor saying, please don't send me a check. We don't have anybody in the office to get it. So we don't want to have to send someone to our mailroom to look for something that looks like it might be a check, only that it then to run to a bank. So I think what's happened is what happened to me in the early 90s when it came to electronic payment for payroll. You know, I used to be one of these people. I used to read a physical newspaper. I used to like to touch things. And I used to like to get a payroll check. Something I could physically say, here's the money I've earned. And then I would gladly go to the bank. And then at some point they said, we're just going to directly deposit it. And I felt like I was being cheated out of that experience until the first time I didn't have to wait in line at a bank on a Friday afternoon. I realized, why have I not done this before? This is the greatest thing in the world, right? And once you have that epiphany of it's perfectly safe, you're going to get paid, it's all secure, you don't really go back.
That's right. Well, I think what you're getting at too is this, you know, what we certainly saw in finance, and I love this about being in finance was that everything was about margin and hobby level touch and feel your checks. Usually margin negative, right? Hobbies are not margin positive. And I think we're seeing that with a lot of businesses, which is this relentless commitment from large organizations in the CFO suite to drive costs out of the business, to increase margins, to increase gross margins, increase net margins, obviously, and increase and improve cash flow. And the poll results were almost everybody on the phone. I think there was 11 and 14%, if you take a look back at the results, were for visibility and cash flow. And if you look at operational efficiency, that's the bulk of it, because everybody knows inherently they are wasting their time copying and pasting and rekeying data. And when we think about the AP time, that's just one aspect. But when you're talking AP automation and AP workflow, it affects the rest of the organization as well. And here's a great example is I see, you know, having been the CEO of several companies now and having been an executive at more, I hate expense reports. I loathe them. I loathe receiving them. I don't want to look at them. I don't want to approve them. And I can guarantee you that no salesperson, after taking a photo of a receipt in a bar after a big night out, is ever going to tag that receipt correctly, ever.
Mm.
You got like maybe a 50-50 shot if there's only two GL codes that you're giving them access to. So the thing that I find really fascinating is that many systems on the market help you enter data, right? They help you enter data, they give you prompts, they tell you which checkbox to check or which drop down menu item to select. The funny thing about it is, for the past decade, nearly every other space, every other aspect of your organization has been affected by this. Systems make those decisions for you. Systems know that it's a salesperson. They know that it's a bar or restaurant. They know that it's a T&E expense or a meals expense. They know that it's an Uber ride. The fact that you have to rely on a salesperson or rely on a downstream field rep to specify the GL code that went against the expense is a legacy expectation. The fact that you have to wait for it to hit thresholds and expense approvals and go out to their manager for approval and things of this nature is a legacy expectation. Much of that can now be automated because systems are intelligent enough. They have direct access to your ERP system. And I think this is one of the surprising things philosophically, to shift from the legacy of, a wizard workflow of, upload your receipt, next, choose the GL code, next, specify who is there at the meeting, next, these sorts of things. And that happens on large expenses too, with, manufactured products and shipping receipts and things of that nature. It's just another extrapolation of the same concept. But we're starting to see customers really react like, oh, you're right. We don't actually have to rely on them for significant variable cost, and we no longer have to become a QA team instead of an AP department, which I think is a massive help. And so we've got a poll over here on the right-hand side, just in terms of how your businesses, people on the phone, how your businesses are thinking about AP automation. And maybe, Jess, if you want to walk people through that poll.
Sure. There's four options of how you currently audit invoices and expenses. Is it your in-house team? Do you outsource or offshore it? Do you hire a different kind of third-party payment network or some sort of AP automation tool to do the audit work? And I think, it's interesting to think about how we take care of that, because those are skills that are necessary to do. Matt, in your experience, any expectations as to where most folks turn?
Yeah, so it's interesting. I think that a lot of companies just don't do it. In reality, I think companies started the process that, if you look at it, it's like rings on a tree, this industry. If you look at the central ring when the industry was youngest, you're looking at BPOs. You had copy companies that had copiers, and they started scanning on behalf of their customer and getting that data with some degree of accuracy to their customer and providing a review. And then you kind of had that next layer, which was the procure to pay firms who said, okay, well, you've purchased everything through us. We best get it right if you've purchased it through us, right? And so you've got a lot of teams that have outsourced to that sort of, or brought those systems in-house. And I would have expected most people to say, we just hire people to do it. We spot check it where we can. Sometimes you get customers that say, oh, they bluster, we do 100% of every invoice. And then you look at the number of invoices and you realize that it's mathematically impossible in reality, this industry. The nice thing about this space is it's very math friendly. A human's time is worth so much. It takes so many of those minutes in order to process an invoice and spot check an invoice. And so you can start to see the majority of companies just do it in-house. They spot check, they use tolerances in their AP automation tools, and they move on, and they hope they caught enough of it, quite honestly.
And I think that's a big challenge of late. Matt, apologize for cutting you off,
Nope.
but the point I'm simply going to make is, as the sheer number of invoices goes up and the size of invoices go up, that means the likelihood of things slipping through the cracks go up, and the risk that a bigger issue will be the thing that slips through the cracks
Yeah.
is going up, right? So you're putting a lot of pressure on an in-house team that's just not designed for that.
No, that's exactly right. I think that the goal of technology generally is to help the user address large amounts of inventory, large units of work, without increasing headcount costs or without increasing labor linearly. And so if you have an in-house AP team and they're just really grinding it out, they're probably not having much fun. They're probably doing a lot of work that they'd rather not be doing that's not value add and accretive to the business. And everybody knows that there's a mountain of gold to be found there. I think the other challenge that you have with the solutions in the space are if you outsource it to a payment network, that payment network makes 1 to 5% of the invoice value of spend. They're not encouraged to find you wasted spend. They're encouraged to help you spend more, right? Contractually, mathematically, they're encouraged to help you spend more. They're biased. And so, you're in a situation where every company basically wants the same thing. They want to be able to bring the expertise and the efficiency in-house without increasing headcount in a response to that. And so you wouldn't, pay an outsourced BPO if you didn't have to, $5 an invoice, if you could simply bring it in-house, but you know that you don't have the tools or tech to be able to do that in an efficient manner. And I think that's what we found actually with the poll. Most people are doing this in-house. And it's hard. It's really hard.
It is, and it's only getting harder.
Yeah. And labor costs will increase and healthcare costs will increase, et cetera. And so it's going to be very difficult to really facilitate working with that many vendors as a company without increasing headcount. And if you increase headcount severely for non-value add items, if it's treasury, that's one thing. But if it's non-value add, then you're just destroying margin and you simply can't afford it. So I think it goes back to that earlier conversation of you have to have a solution and a partner that's going to be committed to generating a return on the investment. I think we have one more poll as well.
That was the second poll.
Oh, that was okay. There we go. That was the second.
Yep.
So I think those are sort of the big problems that we see in the space. And when you think about change management and interoperability, what do you run across, Jess, in terms of system interoperability? The amount of integration that needs to take place in order to get these sorts of systems up and running.
So let me give you some real world experiences that will make your heart hurt. I keep going back to that because I think there's something very personal about watching AP folks struggle, right? These are folks that are trying their best under really difficult situations. So there was a company, again, this is going back to my pre-IOFM days, but the company had been on a hiring spree for the last 50, 60 years and had more than 100 pieces of technology that had come from prior acquisitions. They had absolutely no idea what any of them did. Their solution was, we're just going to unplug one once every 6 months and see if anyone screams. And if no one screams, then we put it on a shelf and we unplug something else.
Yeah.
That's hope is not a strategy, but they're in a situation where there's too many pieces. I'll give you another example. You're talking about ERP systems. Company was switching to an ERP system and to a new ERP system because they previously had 5 ERP systems. And they went to the first business unit and said, all right, you're going to be our test case. This is what it looks like out of the box. Does this work for you guys? I said, well, what you need to know about us is that we're a little bit different. We do these 5 unique things. So no problem. And I can already see your eye rolling because I think you can already anticipate where this is going. We went to the next business unit and said, all right, we tested out with the first business unit. We added the 5 unique things that you guys do. Are we all set? I said, well, there's something you need to know about us. In this business unit, we do these 5 unique things. By the time they got to their 7th business unit, they had spent $3 billion on customization, and we're building essentially a unique ERP for each independent business unit. And removing the visibility that was the desire for the ERP system to begin with. And I think in the ERP world, visibility is really the key concept, right? The biggest thing that you don't have with manual processes is transparency. The visibility to understand what's in the queue, what's coming up next, what you can take advantage of in terms of early pay discounts, where your money is being spent. You mentioned treasury earlier, Matt, and I think one of the stories we keep hearing over and over again is a sales guy going into the treasury department saying, all right, I've got a client. They want to buy our widget. They're willing to pay full price, but they want to pay us over 6 months. Can we afford to do that? And so treasury brings in AR and AP and says, all right, forecast what our expenses are going to be and what our cash position is going to be over the next 6 months. And AP just looks down on the ground and says, I have no way of telling you that. I get invoices when they're due, sometimes when they're past due. I have no visibility into what our expenses are going to be. And so the question becomes, all right, well, what would it take to be able to get to that point? And that's the conversation around automation, sometimes for the first time. Sometimes it's that eye-opening moment for treasury and for senior finance officials to realize that there's a need for visibility. It's not just a matter of making AP more efficient for efficiency's sake, to make AP's lives easier, but to really drive the kind of visibility that can have real world impacts, right? Because if you're able to anticipate what your expenses are going to be in that scenario, you can create a new competitive advantage for your organization if you do it right. Of course, if you do it wrong, you could also bankrupt the organization. So there's no pressure.
Yeah, no, it is fairly binary at times as well. One thing that we see a lot is companies that grow via acquisition, and so they've got new ERPs coming on daily, and so it's always, well, I want to standardize with ours, and then I want to start adding them to that. But the systems in the space don't really, like, collaboration wasn't a first level problem that the systems in the space were trying to solve when they built their solutions. But now that we see exactly how companies end up with 3, 4, 5 ERP systems that they have to connect to and reconcile against and report from, you start to see BI tools were becoming very popular because they were that one integration point to see across all the ERP solutions. But then the BI tools are, tricky at times to build, and they also use the ERP systems as ground truth. But the ground truth in the ERP systems was usually through manual labor, manual data entry, getting the information into those systems, which means you're kind of basing things on an expected general direction of fact versus actual true ground truth. And so I think that's one opportunity that all AP solutions, not just us, but all AP solutions have an opportunity to solve that problem, is that you intercept all of the payments during the process of spend. You capture that information, you code that information correctly, and then you feed the underlying ERP systems so that they are a source of ground truth, so that your BI tools do work, so that the visibility problem doesn't become, so-and-so in AP with 15 tabs on a spreadsheet, right? Which is very common.
Even before that step, having a single source of truth for your vendor master file is huge. One of the worst case scenarios I've ever heard was an acquisition. And when acquisitions are made, rarely do they ever go to the AP department and say, how are we going to be able to integrate the two of you, the acquired AP department and the parent and the acquiree's AP department?
Yeah.
It's an afterthought. But vendor master file conversation came up with AP and said, great, welcome aboard. If you could bring us your vendor master file, we'll start integrating it and cleaning it in alignment with ours. The next day they showed up with a shoebox of business cards.
Yeah.
There are conversations that need to happen early and often in acquisitions. And you've also got 30 days. If this were a public company, you'd have 90 days to report expenses. and you're starting with a shoebox. I think one of the big challenges is having that visibility throughout the entire process, and that's often something that gets that's overlooked in terms of the simplicity of, or what's seen as the simplicity of the manual process that folks have gotten used to, and can truly be simplified through automation.
Yeah, I mean, being able to return value on an acquisition and an integration in a shorter period of time will make AP the champions of the organization, right? They won't be thought of after the fact as they are today. With that, should we go to questions? I'm thinking about a time check here.
We're already getting a couple. So if you have questions, please simply enter them into the chat window, and we'll get through as many as we can. So we're getting some questions around best in class. In fact, folks who are psychic, best in class for supplier onboarding processes.
Yeah, this is huge, right? I mean, if you look at every AP automation solution basically forces you to renegotiate with your suppliers to get them to log into your system and make corrections and upload documents and so on and so forth. It is kind of funny because, you know, if you work with a lot of vendors and you're adding new vendors on a regular basis, how much leverage can you possibly have over every single vendor to get them to log in and do that? So vendor onboarding was a nightmare for the solutions that I tested personally. What I would expect to see, it's something we do. Maybe there's somebody out there that does it and does it better. I haven't seen anybody, but something that we do is email integration and a collaborative sharing function that number one, if they never log into the system, they can forward an email to a unique email address and everything will happen for them. So they don't have to do any of the actual work, which means your vendor onboarding is instantaneous in that situation. Number two is if they want to provide manual input, if there's a particular situation, let's say an invoice isn't reconcilable because of a particular surcharge and, you know, it's 3 line items deep, et cetera. We subscribe to the method that it should be as easy for them to log in as it is for you to share a Facebook invite and for them to log in and see that post. And so collaboration for us was day one. We wanted to reduce the cost of vendor onboarding to minutes, not weeks. And so that's what we've done. But there's probably other solutions out there as well.
I think that easy user interface is increasingly important as we see younger and younger folks entering the workforce. Our cell phones have ruined it, right? When we were growing up, Matt, we expected computer systems to be complicated and cumbersome. Our iPhones and Android devices have ruined it. There's now an expectation that it's intuitive. So I think what you're describing is really interesting. And it's going to be something that I think folks really need to pay attention to. So 1 in 5 organizations in the next 5 years are going to see a significant portion of their staff retiring, which means they're going to be replaced now by millennials and younger. Folks entering the workforce that have grown up with simple, intuitive technology and expect nothing less of their workplace.
Yeah.
So that's a huge deal. I think the other thing that's crucially important is that we're seeing a lot of fraud being targeted at AP, and it's starting with the vendor master file. So the more that you can automate and be able to validate electronically, the better. These are just things that you're dealing with master files that are way too large to ever check manually, right?
Yeah.
So it requires automatic intervention to validate that this is a good company, that it hasn't, you know, changed their billing information. If there's a trigger that lets you know that you should follow up via phone call.
It was really foreign to me when we started looking at vendor master files originally when building OpenEnvoy. It was really foreign to me, the concept that wouldn't be generated automatically. You know, because I think most people are used to having to key all that data in, and the fact that, your AP automation provider already has that information. Why are you required to manually enter any of that data? Just like I just didn't understand it. And so one thing you can do with us is obviously there's an integration with the ERP system and two-way sync, et cetera. But when any new invoice comes in and a vendor maybe hasn't been set up appropriately because it's not a purchase order style invoice, or it's not backed up against a purchase order, which does happen in many situations, many types of costs, we automatically generate the vendor and offer to two-way sync that to their ERP system for approval. So that was just one thing that we solved immediately because we just didn't understand why it required manual entry.
Well, and I think one of the great things, I'll step back and just talk process for a minute. One of the things when you're talking about switching over to a system like OpenEnvoy is that you're in a position where you've got this new burning platform. You're going to be making a change. And one of the changes I'd highly recommend is onboarding all new vendors with both someone from procurement and someone from AP on the phone, right? It has nothing to do with whatever your solution provider is. It's just a best practice because both entities, while they should be part of the same procure to pay process, the reality is they're not. There's a lot of friction between the two. But if you can come together over onboarding, you're at least capturing all the information necessary and you start breaking down some of the silo thinking between the two groups.
That's right. Yeah, that's right.
We're getting some other questions. What are some of the, we've talked a lot about boosting efficiencies. So what are some of the types of high value tasks finance teams should be taking on after AP automation is implemented?
Yeah, I mean, that's a great question, Jess. You've had a ton of experience in this space. What I've seen firsthand is that the AP teams are actually doing a lot of QA of data instead of the work of valuing vendors, researching, forecasting, applying payment terms. So basically understanding where the payment terms are and then being able to make recommendations in terms of when the supplier is going to get paid in that cycle based on cash flow requirements. So it's effectively a lot more working with Treasury. And in companies that still cut checks, which are, as much as that's foreign to many of us, it's still very prevalent in the Fortune 500. And for those types of firms, they've got a lot of downstream like manual activity that needs to occur in the check cutting system. I mean, they've got formatting, template layouts, all sorts of fun stuff. But the fact that they're no longer doing QA on OCR is actually a really big deal. And so that's the type of thing that we see them shifting to. And maybe that changes over time. Maybe they get retrained, et cetera. We had one person actually, once we were fully live in one particular customer, the team there was, I think, 3 people doing 30,000 invoices or 2,600 invoices a month, something like that. And 2 of them went to 2 other parts of the organization and actually brought us into those other parts of the organization. And so they kind of like replace themselves in one situation and move over to another department and do the same thing there, kind of rinse and repeat. So they're now seen as thought leaders in the organization, which is an amazing turnaround. And I mean, it was probably 6 months worth of time that happened. So it's just, I don't know. We've seen that in a number of areas, and it's, to your point earlier, it's valuable.
Absolutely. Let me add to that. One of the things that I see driving incredible value for the organization are early pay discounts. And it's one of those things that without automation, most organizations aren't paying their bills on time, never mind being able to prioritize those with early pay discounts. But the numbers flip-flop once you're automated. Once you're able to tackle invoices faster, then you're able to pursue and capture more of those early pay discounts. Let me give you a couple numbers just to show you how big of an impact early pay discounts are. So I know those of you on the line are not far away from your cell phones. So I suggest you take them out, open up the calculator app. We're going to do some math together. So start by entering in your PO spend. 1 in 5 invoices has an early pay discount for best practice organizations. So take that PO number, multiply it by 0.2. The average discount's 2%. So take that number and multiply it by 0.02. And then you're not always going to capture all of it. Best practice organizations capture 98%. So take that number and multiply it by 0.98. I'll go through those numbers one more time. Take your total PO spend, multiply it by 0.2, 0.02, 0.98. What you'll get is a number that is what best practice organizations say they're capturing. In other words, this is what's being left on the table by not pursuing early pay. This number typically is orders of magnitude more than the combined salaries of your AP team. You want to turn AP from a profit center, from a cost center to a profit center overnight, start pursuing early pay discounts.
Yep.
Another way to think about it is for every $1 billion in PO spend, there's typically 3 to 5 million in early pay discounts being left on the table. So think about the number of people in your team. Even if you don't know their salaries offhand, figure it's probably on an average basis about 45,000 a head, right? Your directors are being paid more. Some of your specialists are being paid less, but it comes out to $35, $36 a year, an hour, $45,000, $46,000 a year. We keep running the numbers, and they're pretty consistent. So you can start to figure out what your expenses are and what those are. Just looking at your early pay numbers for your top 20% of your vendors, those that you do the most business with, the return on investment is 36%, is 36%, assuming a 2% discount on your top 20% of your vendors. You can't get a 36% return on cash sitting in a bank. So if you're blessed in a situation where you've got the cash to be able to pursue and capture early pay discounts, to be able to pay early, highly recommend it. It's one of those things that automation enables you to do that can make a world of difference. I think that's one of the first value-added tasks that can make a difference for an AP department. We were talking about the return on investment, Matt. We're getting questions around switching costs.
Yeah.
Is that something you can speak to?
Yeah, I mean, we add them to the ROI calculation in terms of just difficulty, integration work, professional services work, et cetera, change management. So we add that as part of our ROI calculation. It's obviously not on the default one on the website because it's customized per company, but there are always switching costs. Especially if you're mid-contract, et cetera, and so we take that into account. If they're asking about how we handle it, I certainly think they should take it into account internally. But you should expect, 18 months for a 1x return isn't good enough anymore. Companies that promise less need to be able to integrate in that amount of time as well. And so we focus on a 90-day to positive ROI, including switching costs.
That's tremendous. What are some of the factors that you include in that ROI calculation?
Include obviously the labor costs, as you just went through, the discount, to your point, the discount costs, their cost of capital, obviously the total amount of spend, the total number of invoices, the cost to service 100% of those invoices manually versus in an automated fashion, the amount of invoices that are generally inaccurate from the supplier, from the vendor themselves, based on industry standard numbers. And then we package that all up and we kind of come to an agreement with the customer and determine what makes most sense for them, like how much of a discount they want to apply to that in terms of, conservative. I mean, our goal is to return an obscene amount of ROI to our customers because we just never want it to be in question, right? I strive for, I don't want to charge our customers more than 10% of their return on investment. So for 9 out of every $10 should go back to the customer, in my opinion.
Wow. Matt, I'm going to put you on the spot. We've gotten more questions than we can answer in the remaining minute and a half. Would you mind taking care of these questions offline?
Yeah, happy to do it.
Jovi, we'll send you the questions and then you can just follow up with folks. There are a lot of detailed questions that may be unique. One question that we're getting over and over again, Jovi, and this is going to be for you, is how they can get the on-demand materials if they want to share this conversation with their colleagues.
Yes, absolutely. So the on-demand materials will be emailed to everyone within 2 business days. This will include the link to the recording of today's presentation as well as a PDF of the slides.
Great. Thank you so much, Matt. Thank you for one of the fastest hours I've had in a long time. And for those of you on the line, thank you for listening in and asking such great questions, for being so engaged. We greatly appreciate it. I appreciate your time.
Thank you, everyone. I appreciate your time as well. Appreciate it, Jess. Thank you.
Absolutely.
Great. So
Bye,
that's
everybody.
all the time we have for today's program. I just have a few quick housekeeping notes to go over before we officially close out. If you could please fill out the short evaluation form that will appear once you close the webinar. This will better help us serve your needs in future webinars. And thank you again to Jess and Matt for a great presentation today. And thank you to all of our attendees for taking the time out of your busy days to join us. This webinar was brought to you by IOFM and sponsored by OpenEnvoy. Thank you all and have a great day.